Second quarter GDP came out in the U.S. today at negative 0.9%. This would mark a recession, as this is the second consecutive quarter that we've had negative GDP. And the technical definition of a recession is 2 consecutive quarters of GDP decline. Now, the question is, how will cryptos perform during a recession? We're here to discuss this topic and many other topics with Richard Hart, founder of Hex. And we have a lot of questions from the crypto community. I polled Twitter before this interview and I received more than 300 questions. So thank you for submitting them. I can't ask all of them, of course, but I'll try to ask as many as I can throughout parts 1 and 2 of this interview. So part 1, we'll be asking Richard about the market action that we've seen recently. Bitcoin has been down 70% from the top, but where can we go from here? Is Bitcoin now at the bottom? Well, Richard has been very vocal and critical about Bitcoin, calling it a piece of trash, garbage assets. What exactly does that mean? Richard, welcome back to the show.
I would like to say for the record that on the last appearance here, I said that Bitcoin was going down to 10K. So far, it's only dropped 75%, 10% shy of my 85% target. The price was 65K at that top. Now the price has been down to 17,600. You must have back in. Okay, let's revisit that call, and then we'll talk about the future. Now, you must have back then. We spoke exactly a year ago. Actually, I think it was last summer we had you on the show, and you were calling for Bitcoin to fall by 80%. I remember that, and we'll play a clip of what you said exactly. And you said that it would go down to 10K, because you've said that in previous cycles, Bitcoin usually performs poorly after it's made a top. So you've actually correctly called the top. You've actually said that right before I went to the top. So Bitcoin kept climbing a little bit after you made that call.
Anytime we get one of these big run-ups, which by the way is usually following by a crash, which I think we are due for the rest of the crash. We're already down half. I think we'll go down another 75% to an 85% total drop. I think Bitcoin will tap $10,000 from its high of 65,000 because that's what it normally does. It drops 85%.
But eventually it did come down. You must have
6%. It made a 6% higher high Jewish candle that was bought on leverage. So instead of what happened was the market participants didn't want to do the normal blow off top with the 85% dump. They believed in the super cycle. And so with leverage, Michael Saylor took on leverage, Three Arrows Capital took on leverage. All these lending companies like Celsius, they also took on leverage. People don't realize it, but loans are leverage. You're doing stuff with money that you don't really have, right? Like you're just delaying the sell. And once the price drops low enough, you have to get liquidated. And then that's the real sell. So when you encumber your assets, that's the virtual sell. And when you get liquidated, that's the real sell. And so they bought a double top. It's the first time in Bitcoin's history it's ever done a double top. And now Michael Saylor's at a loss. Michael Saylor, the guy who everyone gave their money to, the opposite of why Bitcoin was invented, they gave their money to Michael Saylor, who maybe can buy Bitcoin with it, maybe not. It's really up to him. It's not like the Bitcoin Investment Trust where they have to buy Bitcoin with it. He can do whatever he wants with the money, I think. Check the docs. It's not a trust company. And by the way, his coin went down 90%. His MicroStrategy Inc. went down 90%. Coinbase's stock went down 90%. Hex, after a 95% dip, is still up 250,000% from January 5th of 2020.
We're gonna touch on all that in just a bit. But
all those guys have to get liquidated. All those guys have to get liquidated. That double top that they bought delayed, so we could have already dipped down to 10K and been going back up. But instead, they bought a fake new high. They got everyone that's a breakout trader wrecked when they bought this slightly higher high of 6% from 65 to 69, and then it went down to 17,600. And now Three Arrows Capital is liquidated. He's got more followers than me. He's bankrupt. This guy, Raul Paul, who was irresponsibly long Ethereum, his words, the largest trade of his life, all his options he bought expired worthless. I told him, ladies, liquors, and leverage is how you get wrecked. That's how smart people go broke. Ladies, liquor, and leverage. Michael Saylor took on leverage. He's down, I believe, 30% on his Bitcoin stack. The government of El Salvador is down. ARK Invest, down. Everybody's wrecked but me. I called the top on the day.
Oh, hold up. We're not even 5 minutes into the interview. You've already made a list of enemies now. It's just like a
hey guys, the chart doesn't lie, right? Like winners and losers, they're bankrupt. Well, Celsius is bankrupt. Three Arrows Capital's bankrupt. Saylor lost money. El Salvador lost money. Richard Hart, doing great. Love and life.
Well, that's great that you're loving life, but a lot of people in cryptos aren't loving life right now because of exactly the market action. So let me just go back to the market action. You must have seen some market forces or macro forces that would push Bitcoin and the other cryptos down eventually, right? I mean, or were you basing your analysis purely on technicals?
No, both. I'm a technical analyst and a fundamental analyst.
Okay.
I've been in this market since 2011. My price calls are amazing. I make very, very few of them. And it's a lot easier to get it right when you're not getting chopped up by just noise. So zoom out, longer time frame stuff. When hasn't Bitcoin done an 85% drop? It always does. It always has. Why would it stop? Everyone thinks this time's different. Nope, this time's not different.
Well,
institutional money's here. Yeah, they all got wrecked. As a matter of fact, ARK Invest that bought Coinbase at 250 just dumped most of their holdings at 50 today or last night. So that lady got wrecked. Like I'm surrounded by wrecked fools everywhere that have more followers than me. It just drives me crazy.
Okay. All right. We're gonna talk about getting wrecked in just a bit. Okay, Richard. So Bitcoin's down about 70-75%. Hex is also down a lot, though. We'll talk about that. But first, okay. So, like I said in the beginning, this is the second quarter GDP came out today. We're technically in a recession. Bitcoin, no crypto has experienced a recession before, because Bitcoin was invented after the last great recession. Let's not count 2020. That was, technically just a blip. Didn't last very long. So how is Bitcoin going to perform now that it's going to experience its first full recession?
Bitcoin is directly correlated with the stock market. The stock market is inversely correlated with interest rates. As interest rates rise, stocks go down. As stocks go down, Bitcoin goes down. When Bitcoin goes down, most other cryptocurrencies go down as well. The first time Bitcoin dropped from 65K to 17.5, Hex went up 30x. The second time Bitcoin dropped, Hex went down with it. Now, I think that's because we have some other cyclical things that were going on, and it's just kind of bad timing that they aligned. Because you can't do a 30x when something else drops in price half. That's a 60x better performance unless you're decorrelated. Right. But, now it appears correlated. So it's like, as long as they're raising interest rates, stocks will go down, consumer spending will go down, especially luxury goods. I called the Rolex. I've got $10 million of watches. This is $1 million Rolex Daytona Rainbow. I called the top on the day. So this was $1 million watch, still is $1 million watch. But if you really bargain hunt it, you can get this for $850 right now. There's one for sale for $850. So, here's the thing that people don't understand. If the investment that you have drops 20%, but all the stuff that you want to buy drops 20%, you broke even. If the investment that you had went up 20%, but all the stuff you want to buy went up 20%, you broke even. And so what really matters is the ratio of what you're holding versus the stuff that you want to buy. And so when I see figures come out of the government, a funny quote is that figures don't lie, but liars figure. I don't believe their statistics. I don't think inflation is as low as they've been saying it is. And I don't really care about this, GDP growth or not growth. It's too weird and too wide. And how does that affect me? I care about Ferrari prices, Rolex prices. I don't know what a gallon of milk costs. I'm too rich to care anymore. But I care about what luxury goods cost. And I care about what crypto costs. Because, people talk about stocks. I mean, look, Ethereum went up like 16 or 17% today. Hex is up 20% on the week. Why would anyone care about stocks when you've got the gains available in cryptocurrency, the best performing asset class that's ever existed, that can put you truly in charge of your money with no middlemen, no counterparty risk? Now, a lot of people don't use it that way. They give their keys to someone else, so I beg them not to. So, whenever people ask me about like, oh, should I mortgage or rent? I'm like, who cares? Crypto, rent, crypto. Like, because the bottom will be found. Eventually they will, after they've raised rates for long enough, eventually they'll start printing money again. And when they do, all the risk on assets are going to shoot right up, and crypto is going to shoot up the hardest. And by the way, as far as drops go, people screw this up all the time in crypto, and it drives me wild. They hide. Remember how I said figures don't lie, but liars figure? Here's this misleading garbage that I see from the media and the idiots in the cryptocurrency space constantly. They talk about the drops. Okay. Bitcoin dropped 75, Ethereum dropped 85, Hex dropped 95. Cool. Great. To any new person, that sounds like a terrible investment. But wait a second. How much are they up? Well, I don't know. When I was mining Bitcoin, they were 50 cents. When I bought Bitcoin, it was $30. Well, now they're $22,000. But what about that 85% drop? Well, you see, let's take a 90% drop. A 90% drop only cancels out a 10x. So if you go up 10x and drop 90%, you're back where you started. Well, Hex went up 10,000x. And so if it drops 90%, it only cancels out 10x. It did a 10,000x. Bitcoin did a 690,000x. Ethereum did a 14,000x. Like, actually, I think Bitcoin did a 69,000x. It only went up 690 million percent. So
True,
it went from, let's say, a penny to 69,000. So it'd be 69,000 times 100. Anyway,
it all depends on when you bought it.
These drops don't matter.
It all depends on when you bought in, right? I mean, last year we were talking, and I mean, if you had bought it in Hex at exactly when we talked last year, you would be down.
Yeah, but that's what crypto does. I'm the guy that popularizes the 85 and 95% dips because they're on the chart.
Sure.
Volatility is the price you pay for the best performing asset in history. If you have a very, very short time horizon, you can get wrecked in any speculative instrument. I mean, what? Amazon's down 20, 30, 40, 50%.
Yeah.
Is Amazon a scam? Amazon went down 95% in the year 2000. Is it a scam? No. Like, volatility is a function of the humans. The price volatility is not something you can program away. It's humans thinking something's worth more, and then they think it's worth less. It has nothing to do with the actual product. It has nothing to do with the coin. It's a function of human psychology. They want it when the price is going up, and the price goes down, they want to sell the bottom.
Going back to your previous statement, why would anyone care about stocks? Well, you were musing. It wasn't a statement. You were kind of questioning why people would care about stocks. Well, we have had a history of some certain sectors in the stock market performing very well during a recession. For example, during 2008, discount stores did very well. Dollar Tree was up 60% on the year. Walmart was up 20%. I'm just looking at some of the numbers here. And so
didn't Walmart just get killed? Like, didn't Walmart stock just take a huge dip like yesterday?
Well, everything's down, but I mean, during a recession, I mean, this was during the 2008 recession, some stocks did well. So do you think then that maybe cryptos can outperform stock? Let me just ask you this. Can cryptos outperform the stock market in this recession?
100%. Yeah, they can. You just have to get the right one. That's the trick with crypto is if you bought Bitcoin, Bitcoin is now roughly the same price that it was 5 years ago. So you could have bought Bitcoin for $20,000 in 2017 at the end, which is basically 2018. Or you could buy it for 22K today. Or a week ago, you could have bought it for 20K. So you waited 5 years for the same price. Same with gold. Gold's the same. Gold's cheaper now than it was 10 years ago. So with gold, you got wrecked. With Bitcoin, you got wrecked if you bought the previous tops on either of those things. But, if you look at a longer time horizon, why would you care about an 85% dip and not look at it as an opportunity when these things go up thousands, hundreds, tens of X? So like, yes, Bitcoin has dropped 85% 3 or 4 or 5 times, but it went up 690 million %.
Right.
And so people always leave out the how far up, even Dogecoin, right? Dogecoin is bad technology. It's just a meme. It was literally invented as a joke in an afternoon, literally. And you're still up massively compared to Bitcoin, even after it dropped 85%. You're like, but people are too stupid to zoom out and go back and look at the history.
We've got some questions. So like I said, we'll switch up the format a little bit. I'm going to interject my questions with the audience questions. So this one came in from David Fetter. He asked, what is your forecast for the next year on the macroeconomic landscape? So like I said, recession, is this going to be a severe recession, Richard, or is this going to be a mild one? Are we going to recover very quickly like in 2020?
I don't know. Those things I don't know.
Fair enough.
And I'm not sure those things are knowable. I think as far as prices go, they will eventually stop raising rates. When they do that, it's going to let all the risk on assets start going up. Crypto will go up the most.
Okay.
As long as you have a 30% discount on Grayscale Bitcoin, which holds 3% of all the Bitcoin, you are not going to get a bull market. And right now, the Grayscale discount is like 32 or 33%. So you can give Grayscale money for fake Bitcoin, but they really hold it. They really have it.
What do you mean
proven.
fake Bitcoin?
Well, it's encapsulated. You can't redeem it. So if Grayscale is a trust company that holds 3% of all the Bitcoin, they've got like 100 and I don't remember how many coins, but it's 3% of the total stack. Maybe it's like 270,000 coins or something. And they've got a trust company that holds them, and they charge like 2% override fee a year. So they make like $600 million a year net just sitting on everyone else's Bitcoin, which is a pretty good deal for them. And you can buy shares in their company that don't give you any right to the underlying Bitcoin.
Yeah.
But, you know, they really hold it. And so, and usually their stuff trades at a premium as well. Usually it trades at like a 20% premium historically. So this 30% deficit's the highest it's ever been. 34, like 34.07, I think was the max so far, maybe a couple months ago. So now my thesis is, how did they get 3% of all the Bitcoin? Because Legacy has so much money to shove into their regulatory arbitrage publicly traded vehicle on OTCQX bulletin board. And there's a lot of people with their LP agreements that are restricted, that they can't just buy currency and they can't just buy speculative stuff, but they can buy a stock. So they like, that's why there's so much money in Grayscale, because there's a lot of companies that want exposure to crypto, but can't get it any other way. Sounds like I'm giving a Grayscale ad here. Listen, guys, if you're giving someone else your money, that's the opposite of why crypto was invented. Crypto is invented so that you hold your own keys and there's no middlemen and no counterparty risk. So as long as you can buy Grayscale, quote, Bitcoin shares in the Grayscale company that holds 3% of all Bitcoin for a 30% discount, and it usually trades at a 20% premium, money will go there. It won't go to spot. Spot will keep dropping. Yeah. And then you could literally see that deficit go lower than 30. It could go to minus 50. Like you could get Grayscale encapsulated fake Bitcoin for 50% off. And the price of spot could go down at the same time.
Let's just finish up with the market forecast, and we'll talk about all these things in more detail.
Sure.
So Bitcoin bottom, you called 10K. Are you sticking to that, or are you updating the bottom?
10K would have been the bottom with a 65K top. That would have been an 85% dump. But since we went up another 6%, that moves the bottom up, I believe, 6% to 10,350. I say 11K because it's just easier to hit, and people like to front run my calls. And so it's just easier and safer to hit it. But really, because the dollars are for the first time becoming more valuable. I mean, you see the DXY at 20-year all-time highs. Right. So the dollar is at 20-year all-time highs versus all the other fiat currencies.
Sure.
And then, you know, isn't that weird that if you thought that the dollar sucked because everything got more expensive, imagine holding one of those other fiat currencies. The euro just a week ago was worth less than the dollar. 15 years ago, it was 1.4 to the dollar. So the euro has lost, it's lost a third of its value versus the dollar, which is the same thing as the dollar gaining about 50% versus the euro. So if you were going to take your dollars and then buy European real estate, it's on sale, guys. Everything in Europe's on sale. Everything in every other fiat currency denominated that's not dollar is on sale. But still, I mean, so basically what that means is inflation is destroying people that have the dollar, but it's also destroying even harder people that don't have the dollar, that have other weird currencies like the euro, pound, yen.
That is true. The DXY is at the highest level since 2002. Okay, so one final question on the market for Bitcoin. You don't think that Bitcoin can revisit...
I'm saying it could go lower. I'm saying it could go lower.
Because you were talking about how Bitcoin's up, you know, tens of thousands of percentage points since its inception. You're right. I mean, you don't think it could revisit those lows ever again? 2015, for example, I'm looking at $500. Can it go as low as $500?
I think that 11K and pray is the right way to look at this. Hope that Bitcoin hits 11K and it's just happy to stop there.
All right.
Because with the dollars getting more expensive and the interest rates slowing and the risk on assets getting beat up, you could get extended performance lower than an 85% drop. You could get a 95% drop. Now, to tell you what that looks like, that's an extra 66% dip. So when you drop from 85 to 95, you would have had 15 left over, but now you've only got 5 left over. And so you got another 66% dump. So it's an interesting way to look at these drops. So like you could see Bitcoin down at 4K, 5K. Sure. You could see Bitcoin at 5K because the dollar's getting more expensive. So I say 11K and pray, but if the stock market gets hard enough, you could go down more, but it all cancels out, right? Because look, yes, your crypto went down, but all the stuff you want to buy went down too. So it cancels out a bit,
You texted me actually on Twitter. You DM me. You said that foreign fiat is death squared, quote unquote.
Yep.
What do you mean by that?
Well, you're getting beat up by inflation, and then you're getting beat up by you can't even keep up with the dollar. So the dollar's getting murdered, and you're getting murdered. So the dollar's getting murdered, and you're getting murdered versus the dollar. So you're getting murdered twice. So it's like I said, if you were holding euros instead of dollars, you got beat up for an extra third.
Why do you think foreign currencies right now? Why do you think foreign currencies right now are not performing as well as they could be relative to the dollar? Like I said, the dollar is at the strongest level since 2002. Just reached parity with the euro since 2002. So it seems like
these guys don't. Yeah. They don't name a product made in the UK that you buy. Name a product made in Russia that you buy. Apple, nope. Samsung, nope. Sony, nope. You're just like, they don't make anything good. So if your country doesn't make anything good, why do you think your currency will be good? For what reason would someone want to buy your currency? So if you have weak exports and weak production and weak GDP, why would anyone want what you've got? America is a powerhouse of productivity. You want the best electric cars in the world? They're made in America. You want the best computer chips in the world? Made in America.
Well, they're technically made in China, but yeah, I see your point.
Well, they're actually not. I mean, most of the semiconductor fabs are in, they're in Costa Rica. Intel's got fabs in Costa Rica, Taiwan, South Korea. Mm-hmm. Like TSMC is all over South Korea. There's actually very few chips made in China. As a matter of fact, they even reduced that even more by like banning Huawei, and like there's like geopolitical things making it hard to make those chip fabs.
Well, just very quickly, I think monetary policy could also push up, foreign currencies, right? Let's take the euro for example. Suppose
they just raised rates for the first time in 11 years by 0.5%, which, by the way, isn't even keeping up with what the United States Fed is doing, because they just raised rates by 0.75%.
Sure.
And so, as long as the Fed is increasing interest rates higher than these other weaker currencies, obviously the weaker currencies will get even weaker. So you would have expected more bid support at the parity of a dollar historically on the euro, and it's very weak bounce. It's like 1.018 now, I think.
Right. You okay? Let's talk about the. All right, that's a great recap of the FX market. Thank you. Let's talk about HEX now. We'll start with the performance. Sure. So, like you mentioned, it's down about 80-90%. It peaked around last September. And it more or less followed the market. Now, you had said on my show last year, you said that HEX is decorrelated because it's decorrelated from the rest of cryptos, you said, because the majority of its liquidity is tied to the dollar, not tied to a cryptocurrency.
HEX is decorrelated from Ethereum and Bitcoin because the majority of its liquidity is tied to the dollar, not tied to a cryptocurrency. Most cryptocurrencies move up and down together, not because I'm an evil mastermind where there's someone saying these are sympathetic products, so they should trade similarly. It's actually just because they're bonded by the liquidity in their trading pairs.
Can you explain that? Is that a view you still hold?
Well, yeah. I mean, so historically, HEX's liquidity, like when HEX first launched, it was tied primarily to Ethereum, and then it was tied primarily to USDC, and then some whale came along and tied it to Ethereum, but then that whale went away. It's tied back to USDC again. So it's really up to the market participants on what pairs they want to provide liquidity. And so if you look at HEX versus Bitcoin, HEX is up versus Bitcoin 250-fold now, today, as we speak, from January 5th of 2020. It's up versus the dollar 250, what is it? It's 25, God darn it, whatever a quarter of 10,000x is, 250 or 2,500x. So the returns are still absolutely insane. And that's the thing is it's like, okay, if Bitcoin's going to drop 75, Ethereum's going to drop 85, and Hex is going to drop 95, which one of them do you think is going to get up the hardest? Let's look at Bitcoin. In the 5 years from the all-time high of 2017, at the end of it, early 2018, till 5 years later, Bitcoin did a 3.5x its all-time high. It went from 20K to 69K in 5 years. It's trash. It's like, it's absolute garbage. And in 2 years, Hex went up 10,000x. So like so let's take Ethereum. You used to be able to get 2,000 Ethereum for 1 Bitcoin when they had their crowd sale. Now you can get, I think 14. And Bitcoiners don't understand they're getting slaughtered. You're like, hey guys, we know how to read price charts out here in reality land. And you used to be able to get 2,000 and now you can just get 14.
In a recent podcast, you said that Bitcoin whales are centralized scumbags. You said they're scummy people. They're just going to sell it. Please elaborate.
Sure. You can only get 13 Ethereum for Bitcoin now, by the way. You used to get 2,000.
Okay.
Bitcoin wrecked. So a lot of these large entities in Bitcoin are true scumbags. So for instance, when I told you that like, Grayscale holds 3% of all the Bitcoin, that's the opposite of why Bitcoin was invented. That is a centralized counterparty that can choose to just not pay you. And then there's a website that tracks all these like industrial entities that bought big Bitcoin bags, and they have 7% of the total.
Well, okay.
And so like Mt. Gox holds 141,000 Bitcoin. What's the only thing they can do with them? Sell them or give them to other people that will probably sell them. That's it. How did they get those? Through fraud. The guy ran a fraudulent fractional reserve exchange that got hacked and had huge errors. And then, so he's got 140K. The guy already dumped, he used to have 280. He already dumped half of it. So that guy was dumping back when Bitcoin was 10K. He was helping push the price down to 3K in 2018. Mm-hmm. Who else has lots of Bitcoin? Oh, the Bitfinex hacker. He had 70,000 Bitcoin. And now the United States Department of Justice is trying to sell them, apparently, instead of giving them back to Bitfinex where they came from, because, hey, I don't know, maybe the DOJ doesn't like crypto. I don't know. And then who else has a bunch? Ross Ulbricht of the Silk Road fame. Don't even know how many of the government seized from him, but they want to sell his stack too. And so you have all these giant. Now, by the way, when I say 70,000 Bitcoin, do you know how much money that is? Let me do that math real quick. 70,000 times 22,000. That's $1.5 billion. So the Bitfinex hacker was sitting on $1.5 billion. The Mt. Gox people are sitting on $3 billion. And these are all going to hit the market. And if they don't hit the market, they'll go to individuals that may hit the market with them. This is all very bad for Bitcoin. You believe in supply and demand. This is a lot of extra supply.
Yeah, I see what you're saying, Richard. But I mean, that logic, can't that be applied to any asset? I mean, in theory, if large entities buy Hex, I mean, if those entities you mentioned buy Hex and they're majority owners of Hex, wouldn't that same logic be applied? I mean, if Hex was owned by just a few small entities, people could just dump. No, explain.
It's a totally different thing. We're talking about the quality, not the quantity.
Okay.
So has an exchange hacked $1.5 billion? Is there an exchange that got hacked that's sitting on $1.5 billion of Hex to dump? Nope. So the losses in Bitcoin have been gigantic. So and it's the quality of people. Because Hex has been primarily not on these centralized exchanges, it hasn't been exposed to these giant hacks. Because where do the giant hacks come from? The giant hacks come from stupid people that don't know why crypto was invented, putting their coins in someone else's wallet, not their own. So let me give you a list of places that have been hacked. Bitfinex, Binance, like almost every exchange has been hacked at some point. And so like, because Hex hasn't been on those things, it hasn't gotten portions of its supply sucked off into evil wallets and criminals' wallets. Okay. Small little bits, one by one, individuals getting scammed, sure, but not massive industrial, everyone gets screwed at once scam, like say Celsius.
Yeah, we're gonna touch on that. So we're gonna wrap up the first segment of our interview about markets. The second segment will focus on HEX in more detail, and we'll talk about Luna and Celsius and some of the other crashes that have happened this year. Okay, so you mentioned Bitcoin being potentially dumped. You know, there's a claim that Satoshi's still out there, majority stakeholder of Bitcoin, hasn't sold the Satoshi coins. We don't know who it is. Now, let me just throw out some theories for you to address. Vitalik Buterin, who was the founder of Ethereum, said a few years ago that the NSA could possibly be behind Bitcoin. Is that a plausible theory, you think?
No, the NSA writes good software, and Bitcoin historically wasn't written to their standards. Furthermore, Mt. Gox isn't sitting on any Ethereum to dump, and they're not sitting on a HEX to dump. And Ross Ulbricht wasn't sitting on any Ethereum that got seized. And the Bitfinex hacker, I'm not sure if he got any Ethereum. I didn't hear about it, but I know he doesn't have any HEX. So, these vulture capitalists, by the way, who owns a lot of Bitcoin? Chamath Palihapitiya, or whatever his name is, the guy that runs all the bad SPACs that get wrecked. And Tim Draper, maybe he's a better VC. And, A to Z and all these venture capitals and vulture capitalists, those guys own a lot of Bitcoin. They don't own a lot of HEX. A critic might say to you, Richard, well, that's in itself a compliment for those larger protocols because a lot of people want to hack them. Nobody wants to hack HEX because nobody cares. How would you address that criticism? Well, it's up 250x versus Bitcoin now. I mean, it's worth billions of dollars.
Exactly.
You just can't hack it.
$11 billion.
It's more secure. It's more secure than Bitcoin.
How is it more secure? Can you explain? How is it more secure?
Sure. Yeah. So Bitcoin's had 2 inflation bugs where anyone could mint as many free coins as they wanted. One time they did. They minted 140 billion extra Bitcoin. Oops, they had to roll the chain back. This was in 2010. More recently, 3 years ago, they had another inflation bug caught by a Bitcoin Cash developer. Bitcoin Cash LOL is down 99% versus Bitcoin. And he could have just minted as many free coins as he wanted, but instead he responsibly disclosed it. And so the most dangerous bug in cryptocurrency is, quote, inflation bug, where you just mint extra coins you shouldn't. You just mint free money. Let me give you a list of coins that have had these bugs. Monero, Bitcoin, XLM, Ravencoin, Bytecoin, AVAX. They've all had inflation bugs. Why do they keep having these problems? Because their consensus code isn't locked and isolated in an immutable, unchangeable thing like Hex's is. Hex's consensus code, which decides how many coins go to which people, is locked and isolated and immutable, so you can't accidentally screw it up. And so all these other coins have accidentally screwed it up over and over and over again. But Hex is a safe within a safe. We have an extra safe inside the blockchain that protects the counts so that no one mints any extra free stuff. It's just more secure.
Okay, so stay tuned for part 2. If you're watching this right now, we're going to talk in detail with Richard about how Hex generates yields and how it generates its very high APYs. But just to close off segment 1, explain how Hex works, because it is a protocol that you founded. It's so, like you said, it's secure. Now, I'm just wondering, I'm wondering a lot of things. But yeah, explain just for those of us who don't know what Hex is. What is the mission of Hex? Why did you design it the way you did?
So Bitcoin tried to be digital cash. Cash is about $5 trillion printed. Time deposits is 7.2 trillion. So time deposits is a larger market than printed cash. So Hex is the best and first attempt at turning time deposits and monetizing time, putting that on the blockchain. So what's the most popular product at your bank? Savings account. Okay, what's probably the second most popular? Time deposits, which is just a savings account plus a time lock. They pay you extra interest. So all Hex is Bitcoin with a proof of work change. Bitcoin inflates to reward miners to destroy the environment and dump the price. Period. Hex inflates to reward stakers to lock up coins and protect the price. That's it. There are 2 coins that inflate single-digit percentages. One blows up the environment, one protects the price, which is perhaps why our price slaughters Bitcoin's price and Ethereum's price, slaughters everything. I mean, we're up 75x versus Ethereum now after the dump. We're up 250x versus Bitcoin now after the dump. So I don't understand why people have like such a hard time getting hacks. It's literally just Bitcoin with a proof of work change. Bitcoin inflates to reward miners. We inflate to reward people that lock up their coins. That's it.
It's on your website. It says that Hex is the first certificate of deposit or fixed deposit on a blockchain. Okay, how does it work like a CD?
Well, it doesn't. So it's just like, how does Bitcoin work as a currency? It doesn't. How does like monopoly money work as money? It doesn't. So it's highly volatile. Is a CD at your bank highly volatile? No. Is a CD at your bank pay you 1,000,000% interest? No.
Okay, but why does it use that analogy?
Less people stake? No.
Why do you have that analogy on your website?
Because it's when you give your coat to the coat check guy at a club, he gives you a receipt, right? What's that? It's a certificate of deposit. Okay. A certificate that you gave him your coat.
I see.
And so like it's the family likeness test would indicate that Hex is most similar to Bitcoin, but what's the most similar time locking thing that we have out there? Like if the longer you lock, the more interest you make. Well, I mean, banks do that. The longer you lock, the more interest you make. We have that parameter. As a matter of fact, we copied their parameters. So every year that you lock, they pay you about 20% extra interest. We copied those parameters because they were known successful into Hex. And so it's just like, all cars are kind of built the same, but some of them are used in demolition derby, but it's the same car. And so you can give people the same tool, but they're going to use it wildly differently.
Yeah.
And so it has parameters that are similar to time deposits, but it has parameters that are totally different. Right. So your time deposit's a security. They can just not give you your money.
Does Hex have a fixed supply?
No. It keeps inflating. But here's the thing. Here's the thing everyone gets wrong. When was the best time to buy Bitcoin? When it had the highest inflation. When was the worst time to buy Bitcoin? When it had the lowest inflation. Life is counterintuitive. Mm-hmm. When was the best time to buy Bitcoin? When Satoshi owned 100% of the coins and the ownership was totally centralized, when there was no liquidity, when everyone called it a scam, that was the best time to buy Bitcoin. And then people look at Hex and they're like, oh my God, the ownership's centralized. Oh my God, it's not that many places. Oh no. And you're just like, yeah, these are the same parameters Bitcoin had when it was the best possible opportunity. And so when you're looking at inflation rates, what matters is the inflation being sold? Because that's what price cares about. The inflation in Bitcoin has to get sold to pay for electricity and mining hardware, period. The inflation in Hex does not have to get sold because you don't have the overhead of mining and electricity bills. And so if you look at what stakers have done, the average stake length has gone up and up and up and up, where I think it's like 7 years now. I think the last time we talked, it was like 5 years. Like the average stake length just keeps getting longer. And so this is people believing in the system more and more. As a matter of fact, I don't think there's ever been a financial instrument in the history of mankind where people have locked up so much money for so long, ever.
Okay.
If you make a 15-year stake, you cannot get out without a penalty. To get your principal out, you have to serve 7.5 years.